Cathie Wood, CEO of ARK Invest, discusses her belief that the EVs will become the dominant trend in car sales within the next 5 years. Last year saw a significant increase of 28% in global EV sales compared to just 9% in gas-powered vehicles. Woods explains that ARK Invest continues to invest in Tesla as they purchased shares in recent weeks for the first time in 8 months. While anticipating the shift towards EVs, she cites deflationary forces and potential for lower interest rates as a factor shaping the market and economy as well.
In interest rates, but just think about the numbers that we're beginning to get out of the big macro-oriented companies. 3M's revenue down 4.5%. That's negative, both units and prices. And I just heard you on Texas Instruments. I think their sales this next quarter are going to be down at the midpoint, something like 18%. That's year over year. These are revenue declines. We've been saying for quite some time that there are more deflationary forces out there that many people recognize. A lot of them are coming from China, now more so as well from Europe. And I think that here in the United States, we won't escape that. So we actually think interest rates are going to fall sooner and faster, I think, than most expect. And so in terms of valuations, that should be very supportive to valuations.
It should be supportive to valuations. I wonder if you believe that we're in store for a soft landing then, or if the Fed's behind the ball and cuts are going to be even more steeper than perhaps the market is anticipating.
Yeah, we've been saying that we've been in a rolling recession, we believe, for 2 years, and that the Fed is going to find out that 5.25 to 5.5 was just too high for given the deflationary forces that are building out there. We think there's going to be outright deflation this year, price deflation. Some of it good, associated with technology and learning curves and so forth. But some of it bad, which is more of the hard landing scenario. It won't be like 08, 09 at all. We've been in a rolling recession for a long time now. But we do think we're at the end of it and that the Fed will lower interest rates.
Speaking of deflation, Cathie, Tesla has been cutting prices on cars. Investors have been cutting Tesla's stock price. You bought Tesla last year when it was cheaper than this. I think you bought some more, a good chunk, a little bit more than a week ago. Do you keep buying it as it goes down, if it continues to go down this year?
Well, if you've watched our trading, and we do publish our trades at the end of every day, you'll see that we've been trading Tesla at the margin. So when it is soaring and everybody's excited about the good news, as we move towards electric vehicles, we will take profits. And likewise, as investors and traders begin to fear that we're going to be in an air pocket, we've got a 5-year investment time horizon, and we think that in 5 years, most car sales will be electric. And that is a trend that lower prices actually are going to encourage. So that's the good deflation, as we've got electric drivetrain prices coming down.
Okay.
In price. Tesla can price down. It can price down if we're in a weak spot globally, and it does appear that we are, certainly China and Europe. And even here in the United States.
Let me challenge you there with what Hertz just did, backing away from EVs, saying, yeah, I mean, people really love Teslas. That's not translating into how much Teslas cost to repair and maintain and the viability of them maintaining a fleet. So I understand that you're trading around it now, but for the people at home who don't necessarily do that day by day, where's your even mark? Where if it goes below here, that's when you're really pushing into it, leaning into it.
Well, we cannot talk about what we are going to do prospectively. But just to address Hertz, there is a learning curve with EVs. And I think a lot of people go to Hertz and say, I'm going to try my first EV. And they learn, okay, if you're going to drive 50 miles or 100 miles, you've got to start thinking about charging. So a bit of a learning curve. It is true that the repairs the repairs cost more, but maintenance also costs 60% less. So there's a bit of a trade-off. If you listen to Uber, on the other hand, Dara will tell you that they're encouraging more of their drivers to rent from Hertz and others because the drivers get more. Uber's take rate is not more, so it is really beneficial for drivers, and consumers love them. They're willing to pay up. So, when innovation is evolving and the infrastructure is moving into place, but not quite there, especially in terms of repairs, you're going to go through fits and starts like this. But the trend is undeniable. Okay. Last year, electric vehicle sales globally were up 28%, while gas-powered vehicle sales were up 9%. So share gain still.